Binance Futures Funding Rate Explained. Funding is a mechanism to balance the price of the futures contract with the spot market. While the number of long and short contracts is always the same, their leverage is not, which can cause imbalances in price. To deal with that, exchanges came up with a funding rate that occurs every 8 hours. So how much is it and how is it calculated? I will focus on Binance since, in my opinion, it is the best place to trade, but the same applies for most, if not all, future exchanges. If you still don't have a Binance Futures account, sign up with the link below to get a 10% discount on fees for 30 days and also a lifetime 10% discount on your spot account. Essentially, the funding is designed to encourage traders to take positions that keep perpetual prices in line with spot markets. Funding rates are paid peer-to-peer. Binance takes no fees from funding as they happen directly between users. The funding on perpetual contracts is calculated by a standard rate of 0.01% plus the premium. If the price between the perpetual and spot diverges, the premium increases or decreases accordingly. When the price of the perpetual is higher than the market price, long traders will pay for short traders. A negative funding fee indicates that the perpetual prices are below the market price, so short positions will pay for longs. In normal days, the funding rate will be 0.01% every 8 hours, which corresponds to 0.03% per day or 0.9% per month. In practice, the funding rate tends to be slightly higher, especially during bull runs. It's quite uncommon to have negative funding for long periods of time unless there is a big market crash, like the one we saw in March 2020. Funding calculations consider the amount of leverage used, so the rate will apply to your entire open position. With high leverage, a trader that pays for funding may suffer losses or could even get liquidated, so always consider the current funding rate in your strategy. Historically, crypto funding rates tend to correlate with the general trend of the coin. The correlation does not indicate that funding rates dictate spot markets, but rather the inverse is true. Keep in mind, quarterly contracts have a set delivery date and do not have funding, so they trade at diverging prices and can be used for different strategies. Just to give you an idea, the funding can go as high as 0.75% in 8 hours for smaller coins during a strong bull run, but that only happens in extreme cases. You can read more about funding rates and historical data on a particular asset on the Binance website. Thank you for watching, and I will see you in the next tutorial.